O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We kick things off 3 p.m. Eastern Time in Monday, and markets clawing back the losses from this morning. Talking about a move of 85 points from low to high, and that is a move, folks, from 9:15 this morning, not cherry-picking some low at midnight. Right throughout the trading day, a little bit of a pullback into 2 o'clock, and we're trading higher yet again with S&Ps off by just 1 point. And when you look at this market, okay, we're off by 1 point. But if you calibrate where we actually went into Sunday night, right, you traded lower in the final hour of the trading session on the Moody's downgrade. We get it all back, and actually, and then some, right? Higher than where you were on Friday. We're right at that price level. NASDAQ 100, we're negative by 14 points right now. And yeah, you talk about a move, man. How about a move about 400 points from 9:30, the open this morning, up to 21,544. We're negative by just 13 points. The Dow, as I mentioned there, the 3 o'clock update, leading the way, led by UNH. When you got a company trading up $21 in a price-weighted index, UNH up by 7%, $312. And the Russell, negative by about 0.7%. But how about the Russell? Good 25 points off of the lows that we had this morning. Lows made, yeah, right at about 9:30 a.m. So let's talk a little yields. Let's talk a little dollar. And that obviously ties into gold. But as I talked about as well, all right, we're clawing it back. We had quite the run here where everything was getting sold off, and someone's coming in and buying. That's for sure. We get the 10-year higher price, lower yield. That brings us back to 4.47% right now in the 10-year. You jump over the dollar, bouncing from the 100 point. Yet again, we're at 142, we'll call it. And gold, catching a bid on some dollar weakness. Gold up by about $50. Since we're talking yields, this one. Mortgage rates cross back over 7%. Now, after the U.S. credit downgrade, okay? But nonetheless, that's not what's driving this market. You know, we can talk about it. I talked about it this morning. You better believe it's the all-known fact, right? Moody's very late to the party. Doesn't mean it doesn't ring the bell and everyone remembers in terms of a reminder of where the debt is as we're passing another tax cut that is not paid for. We're going to add $5 trillion over a period of 10 years. But nonetheless, mortgage rates, that's a tough number, man. You get mortgage rates down to a 6, that could change the market. But guess what? The average rate, 7.04%. The highest level since April 11th. And boy, a 7 handle on a mortgage is a tough one, man. You jump to that, to Mr. Diamond. So he's doing some speaking today. And he's saying, hey, you know, this 10% tariff deal, we haven't had these price levels since the 70s. There's a lot of complacency going on in this market, and I would agree with him. We're going to tie it to the volume, okay? But there's nothing wrong with a fundamental look on top of the technicals. He's at the bank's investor day in New York. It's an extraordinary amount of complacency, Diamond said, noting the last time the country saw 10% tariffs, 1971, on all the partners. And yeah, it would make sense, right? You got Walmart out there, of course. President Trump coming back at Walmart saying they should eat them. But Diamond said Monday that he thought the stock markets could sell off by around 10% as companies lower their earnings estimates and investors to reappraise the value of U.S. equities. He also warned about a credit crunch that could ensnare companies used to easy financing. American asset prices, I still think they're kind of high. I think credit today is a bad risk. And all that is pricing in where we are. It's not, you know, it's not selling doom and gloom to say the market might pull back 10% as we're dealing with some volatility here. As you take a look at this market, we're sitting at 6,000, 10% is 300, 5,700, brings us back to where we were last September, October, getting ready for the election. Nothing too dire from where we're talking about. And on a relative basis, you know, we're rising a bit, but we're still talking about a 10-year yield at a pretty affordable 4.4 or so when you talk about where the U.S. is, the treasuries, and what that number stands for. But yeah, there is a little complacency. Now, we get into the volume, okay? I talked about this morning. But man, we're bumping up against this area, okay? And yeah, we got to charge higher, 59.72 in the S&Ps. This acceleration lower in the markets really began at about 59.80. We're within 10 points on the S&Ps in the 6,000-point index. And we had a level of sustained volume that we haven't had since. You know, can we go higher? Yeah. Do you have your back against the wall here to push through this area? We're going to see. It's going to take a lot to get through it. But we're charging higher with some strength today, and we'll probably get some volume. So we'll see if we can get a real volume bar here as we extend over 6,000 on the NASDAQ, on the S&Ps. You jump over the NASDAQ, same exact deal. Okay, that high, 21,386. Whether you go back to February 27th, if you go back a couple higher days higher, 21,453. And we're within, again, 20 points in the NASDAQ. And that's really where the selling volume began. The 27th of February, maybe you can make the case February 25th. It wasn't just the price action, okay, on the first move lower from February 18th highs in the markets, the all-time highs, wasn't just the price action. This is the volume action, folks, and we've got nothing like that, all right? We did 700,000 plus contracts for a few weeks in a row. For some context, in the last 6 weeks, we've only done that volume on 2 occasions. We did it for 3 straight weeks. In the last 6 weeks, we've done it twice. Remarkable level of strength to the downside here. We're clawing it back on fumes, and we'll see if we can get above it. You jump over the Dow, and there's the same price action, okay? There's all the volume on the Dow even, which I don't even like the Dow, right? But you see it. Look at the volume we were doing February 27th, 205,000 contracts, right? 215,000. All these in between, 180, 170, 180. How many are we doing now? How many contracts are we doing there now? 60,000, right? Yesterday, we did 58,000 contracts. We were doing 200 for a few weeks in a row on that first move lower. So there's a level of consolidation it's going to take to get through this area. And we haven't seen that consolidation take place. It would be very difficult for this entire market, okay, to blow through this area of volume. And I know I'm spending the whole first segment on the program. Folks, this is what I'm watching. All right, look at the volume there. Think about the consolidation you'll have to get through, right? That layer of trading activity that you got to get through. We're lifting up there on fumes. And it doesn't mean Diamond's going to be correct, all right? I always crack up as this goes forward. You got the Wall Street. Right? Yep. There's Bloomberg. They put him out there as well. Folks, he's not the only person saying it, okay? Of course, he gets headlines, rightfully so, but there's a distinct possibility that some of these lagging impacts, that Wall Street, that Walmart CFO, folks, all right, saying, have you seen the price hikes yet? They're coming. We might face a headwind. Market trading right now, though, strong day, clawing back those losses. S&P's off by 5. We got a lot to talk about. Stay tuned, folks. Come right back.
If you spend